Hello friends, I'm Arun Tiwari and as I promised in my previous video in which I told you the different type of analysis which we use to analyze the stock market to pick up the good quality stocks. In that video I promised you to give a bonus video on short selling. So friends, we are just in the process of learning all these things, but why I thought this to make a video on short selling, because nowadays as you understand the market is correcting, you might be you might be listening a lot of thing about stock short selling. Short sellers are making so much money, so you might be a little bit thinking what is this short selling, why the short selling is done, whether it is a very good thing to do, how to do it, whether it's profitable and all these things. So I thought I should make a video right now and should not wait to go everything like stepwise, and then at a proper particular time place you can correlate with this video. So first part friends, this video is going to all about what is called short selling. So let's start. So friends, the first part, as you understand, it's a short plus sale. So sale, I think you understand, to sell something, to you can say to transact something, so it's called sale. So you can sell stock, you can sell anything, commodity including stocks, like but what is called short? So short sale is as simple, I don't have something and I want to sell it, because I don't have to sell anything. First thing I should have this, so I want to sell. So for example, a share of say L&T, but to sell that I should have bought it. Or in a simple form, if I'm going to sell, like I'm going with to friends to sell tomatoes, but to sell tomatoes I should have a tomato. I cannot go with the empty cart and just shout, okay, tomato le lo, tomato le lo, tomato le lo, tomato le lo, and then people come and say, where is the tomato? So you should have the tomato first before you sell it. But in stock market there is one facility called that you can sell stocks without having that stocks. Okay, so you don't have some stock, but you feel that this stock is going to go down, so you can sell that stock and buy later. So basically what is this arrangement? The simple arrangement is that you are going to borrow. So like if I am going to sell something and I don't have, so I can borrow with some other fellow tomato wala and say, see, I am going to sell tomato and I don't have tomato, so you just give me tomato. Once I will sell the tomato, I will return you someday. This can happen, right? So this is called short selling. Now here in case of share trading, to whom I'm going to ask for the shares? I'm going to ask my broker. So broker is a person where I open my trading account. So in short selling what happen? Your broker with which you open your trading account. So you always open your trading account with broker and not your demat account. Demat account is opened with either CDSL or NSDL. I will talk some time back about or in some other video about this part, but here you are going to open a trading account with your broker. Okay, your store front you're going to open with the broker, and because you are open a stock share, you are going to pay your broker some kind of brokerage. So he gives you one facility. Suppose if you want to short sell, like you want to sell L&T stock and you feel like the L&T stock is going to fall and you don't have that stock, at that time you can ask your broker to borrow the stocks, and then you can sell it. And after, so the short sell can be for intraday, like for one day only, like you buy at 9:30, you sell at 9:30, and by 3:30 you have to square it off. Square it off means you are going to buy it and you are going to give to the broker from where you have borrowed. So it is called short sale. So in simple say, you don't have money, you are short of something and you are still going to sell, so you borrow from your broker and you sell it. So these things makes a short sale. I hope I am pretty much clear on this. Now what is the benefit of that? See, if you see, the benefit part is very beneficial. Like you can trade both way. So generally what happen, we think in stock market we can make money only one way, like we buy stock at 10 rupees, stock grows, it becomes 12 rupees, we sell it, we make 2 rupees profit. But reverse is also possible. You can sell a stock at 12 rupees and then stock market goes down, and at 10 rupees you can buy the stock and you can give it to the broker. You make 2 rupees without getting any stock into your account. So this can help in the scenario when the market is correcting, market is crashing, like now the market is correcting itself. So in today's scenario, this kind of short sales can make a lot of sense, but is it advisable to do? That's I'm going to do. For the time being, understand, if you want to short sale, you can do two ways. First, you can do intraday short sale, like you sell today and cover up at the end of the day, or you can do that short selling in future in option market, where you can get maximum of 3 months of time. Now, the short sale, why it is problematic, I'm going to tell you. First thing, you should have a lot of you can say research, and you should have a lot of conviction when you're going short of something, because what happened, see, it is a double-edged sword. So if you're right, you are going to make a lot of money in single day or maybe 2-3 months. People have made millions or not even billions in short trading, but if you are wrong, I think you will be losing like anything. So for starting up, like if you are just starting up in the share market, please don't go in short trading. There may be a lot of video where people tell about that, this, that, other things, but short trading is for very professional kind of thing. So you can also learn, but yes, you have to devote time. Now you understand. See, in stock market, you are making real hard money. It's not as a place of playing around. So you have to be very careful about it, because there are people who spend a whole life, and like you just listen my video or listen somebody's video and say, oh, you can make 100% gain by trading this share, short trading this, that share. You get a tip and you do it, you're going to lose a lot of hard-earned money, and trust me, it will not be good. So don't do the short trading. It is definitely not for new players. It is for very, you can say, veteran kind of people. They do it with a lot of conviction. You understand, some people do research on some shares from maybe for 2 to 3 years before taking any kind of short positions. 2 to 3 years, you understand. If you don't if you really want to know more, there's a movie which is called Long Shot. You can watch, definitely you should watch that movie. It is all about short trading, how somebody has taken a short position in subprime crisis of US, and they made, I think, billions of rupees. But yes, they lose money also. um, so there are some people who are professional shorters. Okay, so this is called short trading. Now, why is it so risky? Because see, you understand that you feel about some stock, some share, some share that is going to crash, like Yes Bank. Nowadays, you can say Yes Bank or Vodafone Idea. These are two stocks which like on the verge of finishing up almost. So you can say, okay, I can short this trade because this stock anyhow going to crash. Now you understand. First thing, you feel this way. Already there are lots of news in the market, so the professional short trader already has taken position. Okay, second important, so just understand that in the market the news should be fresh. This is only if the news is fresh and you are going to be early mover, then you are going to benefit. If you're going to laggard, like you are going to follow the people, then it's not going to make much sense. So first thing. Second thing, one good news and the market, their prices could be reversed. Like one good news that government has said, okay, fine, we'll support Vodafone or we'll support Yes Bank, and if you take in short trading, you're gone. The market will, the share will rise like anything, and you will lose anything. And not only that, see, there is something called uh, um, short squeeze. Short squeeze is basically what, see, there are lots of people who already shorted that share, like they don't have share, they sold it and they are waiting that market will correct, that share will go further down and they'll make money. But if one news comes and market, because it's very news sensitive item, so the market will suddenly reverse, and those people who are sitting with actual shares, they will not sell the shares. So in the short selling, what you have to do, you have to cover your stock, cover your position. Means you have sold first, then you have to buy the stocks. But the problem is this: once the market become favorable, once the stock become favorable, some good news comes for the stocks. Everybody want to buy it, but nobody want to sell it. But you have to buy it because you have to cover it. It is short sale. You cannot keep it for like 6 months. You don't have shares, because once you have shares in your demat account, you can keep it for 6 months, 6 year or 60 years. Is it up to you? But if you don't have your shares, you borrowed with somebody, you have to return that person's. and then you have to buy share at costly price. And not only that, then everybody is going to buy that share, or price of that share is going to rise faster and much faster. So that squeeze can kill a lot of short traders in one go. So I have seen people losing like money like anything in short trading. So short trading is definitely not game which a newcomer should play. Just for information, I told you. Just I'm little bit going to tell you how it should be done. There is, see, short trading. Everybody can have a different kind of approach, but even somebody is trying to short, I think they should have at least 1 or 2 years of experience in stock market, and then only they should attempt to short the trades. There are lots of you can say online games where you can play stock market games, and you can do this kind of stuff adventures, and you can see how your skills are improving. You don't have to lose your actual money to experience it, right? So that's it in this video. I think a little bit and most of things I have cleared. There are some technical parts which will clear as I will move further. I will tell you about future and option. I will tell you about what is called covering the stock, squaring off, everything I'm going to tell you. Don't worry about it. This is a bonus video because I just want to update you, because you might be hearing lots of news around short trading, shorters, and all these things. And there are definitely one tool is available where you can make money even when everybody is losing money. So this is also part of investment idea. So investment means definitely not just invest and forget. You have to protect when the market is correcting, and you have to further invest when market recovers. So it definitely don't have to do on daily basis, but sometime, maybe quarterly, maybe once in a year, there will be some chances where you have to behave like a trader, where you have to protect your portfolio, and at that time this kind of stuff can help you a little bit. But yes, with one input, don't try it at home. It's very dangerous things. That's it for today, friends. And please post me. I'm just looking for your feedback, that how I'm going to present it much better way. With this video, I'm going to put some little bit of images, little bit of videos, so that you can understand much better. So please tell me how you want this to be played, and I'm definitely going to put a little bit of you can say PPT, some kind of thing in this video, so that you can understand it much better. That's all. Please subscribe to my video and give me feedbacks. For today's Arun Tiwari saying bye bye. Take care. Thank you.